Okay, very good morning. So Wednesday the 29th of March, a historical day for Britain, given the formal triggering of Article 50 to take place. So as such, that's very much the dominant theme in terms of the press and the news that you're probably reading this morning. We'll go into this in more detail, but let's just look at the charts first and see how the setup is for this morning. And you've got European equities up on the front foot. Dollar quite a bit stronger. Really, it was after the European close the dollar really started to gain some traction as it looks to reverse some of the losses that we're seeing really since the dovish hike that we had on March 15th, and kind of some of the dovish commentary as well. More recently, some of the Fed members, there's been a bit of a turn on that with Fisher speaking last night. But ultimately, some economic data really sparking the markets into life, and what otherwise had been, when I've been talking about data in the US more recently, I've been saying that generally speaking, because the next kind of influential Fed meeting's probably not going to occur until at least June at the nearest, if not further out down a timeline of when the markets start expecting further interest rate moves or more exciting interest rate conferences. So data right now is probably of a lesser significance, unless, that is, you get a real extreme outlier. And that's certainly what we had yesterday. You'll remember we had the US consumer confidence figure was absolutely amazing in terms of historically the levels that we're at. It was the highest reading since December of 2000 in terms of how confident US consumers are at the moment. So we're looking at the number here, tracking up around the 125.6 level. You're having to go back really until 98, 99, 2000 when we were last up at these levels. As a reference point for this data set, the record highs are up at around 144, but certainly from the financial crisis lows, when we were seeing down at kind of 25, we're now 100 above that. In terms of where we're sitting. So any kind of fallout you may have thought from Trump, maybe people becoming a little bit tired of a lack of action, although this is probably not encompassing the cancellation of the repeal of Obamacare, but certainly not a great deal has actually happened in reality from Trump, but the US consumer continues to be ultra positive. I think if you look at the actual breakdown of the actual report itself, the gauge of present conditions increased to its highest since August 2001. The measure of consumer expectations for the next 6 months hit its highest since September of 2000. So, underlying the headline figure, just strong across the board, and this also came in combination with the Richmond Fed Manufacturing Index, which by no means probably carried as much weight, but certainly has continued this pretty phenomenal recovery and performance, improving performance across these regional manufacturing indices that we've seen, or index readings coming out. We've gone from 4 to 8 to 12, 17 to 22 now. So another very strong number there. The highest reading, in fact, since April of 2010. So the combination of that led to upside in US equities, and more importantly, dollar strength started to come back. You can see that with the euro currency yesterday. If I go back to really 3 o'clock was the trigger point. It took a little while for it to come in. As I said, after the European close is when it really picked up pace, breaking some key levels to the downside, euro dollar coming under pressure. And then looking at cable this morning, obviously there's a bit more going on for sterling currency, but really the first bit here I want to just quickly look at on the cable chart was when the data came out. Now the data came out on, if I just circle it here, that was when the data actually came out. And at that point, as I say, it took the market a little bit of time before it really started to buy into that move. It was almost as if the equities, it was kind of, how do you read this extremely strong data in the context of policy, but it started to go into the more theoretical type move, just a broadly strong economy, irrespective of any kind of fragile sentiment there may have been on the back of the Trump failure. And as such, equities started to rise, as to the US yields, and the dollar started to strengthen significantly. The trade that I was really looking at here was, at the time, there was that level I still had marked up from yesterday. So it was the high point of the 22nd, and also a blip higher and a test on the 24th before we broke through it at the beginning of of last week, or I should say this week on the 27th. So when we were coming lower, obviously there's a lot of negative sentiment generally building up. The Scottish Parliament as well voting through in terms of a second referendum, which we'll have a look at shortly. But the kind of formal triggering of Article 50, although it's not anything new, again, it's kind of a reality check, if you like. That against then this fragile, negative kind of build-up of sentiment for the pound in the context of a phenomenally strong figure out of the US meant that, for me, that short looked pretty assured, really. And, broke that level there. When it came back up, it was a little bit messy to get the classic there. Had to have a bit of a wider stop, but then eventually you got a very aggressive move then as the dollar really livened up after Europe left the market. We had a pretty nice run all the way down to, well, really this is a key level now, 124.66, before we've kind of recovered late in the US session. That level also just defining that high print from the 20th. Close to it there, you can see on that dip, and then a bit messy on that 22nd move, but again, a bit of a focus. So if we come back up to that level, I'll be keeping an eye there. Also as well, I guess the kind of natural intonation for a morning like this is to think, right, I really want to short the pound, but don't forget the pound has depreciated almost 2 full points already today. Looking at where we were in yesterday's session in the morning, we were, this is the entirety of the move there. And so in effect, we've gone from around the highs that we were trading around above the 126 handle to testing 124 handle in overnight Asia Pac trade. So do put in context that overall, what's happening today is to a larger extent priced into the market, and certainly probably even more to this extent now that we've fallen a good 200 pips from yesterday's levels. So I think you just need to be a little bit realistic about jumping in, just trying to just short the pound at this point. If it does come back up, obviously that 24.52 level looks quite interesting, giving that low point on the 22nd, and above there that 124.66 as well, on any move back up, to then probably target back towards this S1 level and potentially blow to 124, which is the Asia Pac low seen overnight. Now, looking a little bit, let's just zoom this in a little bit. Let me just clean this up. The move here seen overnight at 1 o'clock, this is more a byproduct of the lack of liquidity overnight. Likelihood as well is that's when, usually at around midnight or thereafter, is when a lot of the electronic newspapers like the FT, the Guardian, the Telegraph start publishing their pre-written reports. They start firing out on their online editions at around midnight. And probably there's you've seen this before, a liquid market, maybe an algo fires off on the back of certain keywords being released in certain publications, and it tends to spark some pretty volatile activity. It looks like we popped down to literally that 124 handle before then recovering and steadying overnight, and then not really too much movement seen thus far this morning, given the context that the trade really, you've kind of missed it if there was the bigger, cleaner trade which occurred last night. So obviously it's a combination of two quite clear, distinct divergence in fundamentals between really strong US economic data in the context of fragile sentiment, now that Article 50 is going to get triggered formally today. The other thing as well that helped the dollar yesterday was this chap, Fed's Fisher. And for those of you who know your Fed members, you'll know that Fed's Fisher sits as one of the most important at the FOMC because he sits as a kind of deputy governor and therefore is most closely aligned with the thinking of Janet Yellen, or tends to be more reliable in terms of communication that he delivers to actually what occurs. And what Fisher said last night is said probably 2 more 2017 rate hikes seem about right. Now, if you think about people like Evans yesterday when we were talking at the briefing, he said that actually maybe 1 more is fine and 2 for the year is what's appropriate. And so actually we've started to hear people turning a little bit more dovish. Kaplan kind of beating the drum of cautious and gradual approach. We kind of returned to where we were a few months ago. But Fisher sticking to the script. 2 more rate hikes would be 3, which would put them on track with the projections and the forecast of 3 rate hikes for 2017 that they originally issued back in December, and then they ratified again in March. And so that also as well helped some of that downside trade that occurred in cable last night, and consequently also in Eurodollar as well, as the dollar twofold then took strength out of the underlying health of the economy and also some of the communication out of senior Federal Reserve officials. Okay, so let's have a look at Article 50. A couple things to be aware of then in terms of timing, I guess, and how to digest what we're reading from the headlines this morning. So Britain heading into the unknown as May signs the Brexit letter. So this isn't new. This is all part of the schedule. Do keep that in mind. She's already signed the document. Basically, how this will go down is that the PMQs will happen as completely as normal. So we'll be tuning in for those at midday. The official process expected to start just after 12:30, when British Ambassador to the EU, Sir Tim Barrow, presents May's letter of withdrawal to the European Council President, Donald Tusk. And so what's going to be interesting then is what does Theresa have to say when she, no doubt, will get grilled very intensely by parliamentary officials today. Something which we were talking about yesterday, something to be aware of, is that I think that there is a small possibility, especially given the market positioning that's occurred yesterday, that the pound could see a mild relief rally, possibly when she starts speaking. Now, my thinking on this is based upon the fact that, she probably will have worked with her team very hard to signal a very positive, kind of uplifting, we're doing the right thing, we're fulfilling the mandate of what the people have voted for, kind of speech. Like what we saw with the speech several months ago when she outlined her 12 principles of Brexit. If you remember, the pound loved it, and the pound rallied quite aggressively about, how kind of the authority that she delivered it with gave people a lot of belief in the marketplace that actually she's going to be able to handle this situation with aplomb. And so could this occur again today? Now, she's going to come under the scrutiny, obviously, of opposition parties in Parliament, so it'd be interesting to see how she handles the heat. The other thing, of course, will be, what does Donald Tusk say? So when the EU meet later, what's EU's stance? Now, one of the interesting things was a report in The Guardian yesterday, which was saying, according to sources familiar with the ongoing talks and discussions behind closed doors, is that Britain might be actually already starting to soften some of this hard Brexit line. And if that is the case, and Theresa May says something along those lines, then probably that will be perceived as a pound positive. Because then that means the further we move away from a hard Brexit initial stance, the more likely then towards a softer leaning start to negotiations would be pound positive, because it would have a lesser impact on a negative way on the UK economy. In that instance, it would be how people would trade it, at least in the short term. So really it's at 12:30, we'll be listening out for Theresa May, and so it's not so much this process of her delivering the letter. The letter's done. It's going in. It's more about what does she say today. Now, on this note, let me just show you. At 7 p.m. tonight as well, Theresa May is having a half an hour long, I understand, interview with the BBC. So there's also possibly another flashpoint of activity to be aware of at 7 p.m. this evening, when she is interviewed live for half an hour, which is a pretty long session. But again, this is all part of government's communication strategy in order to communicate confidence going into what is an uncertain situation. This is kind of like central banking 101. In order to negate potential market volatility, you have various people speak, press conferences with Janet Yellen, speeches from Fed members. This is all to negate any fallout from the market, which is exactly the tactic in which the government will be using as well today. So definitely going to be an interesting day to see what they've got to say. The other thing that obviously occurred yesterday was Scottish Parliament backing a second independence referendum by 69 to 59 votes, setting up a clash with Downing Street. Now, I must stress, though, that it is likely to be blocked by Westminster, but that still doesn't mean that these two are not going to go head-to-head for Brexit Britain to see who comes out on top. There's going to be a lot more noises coming out from that, and even today, possibly. It would be in Sturgeon's interest, I would imagine, to come out on a day where Theresa May is going to be talking up that they're doing the right decision. Obviously, Nicola Sturgeon of the complete opposite opinion, so I'm sure you'll be hearing from her today, looking to confront her head on. Okay, moving elsewhere, let's have a quick look at other news that has come out. If you're looking at crude oil this morning, we are sitting up above the high print that we had yesterday, so we're up around 45 cents already this morning. So the high from yesterday was printed at 48.74. We're up testing R1 at the moment at 48.85. So 44-cent gain. A couple of news items to be aware of. You did have the API crude oil inventory data last night, and quite frankly, I would say this was completely unimportant in terms of how did it impact the market. If we go back to 9:30 last night, that was the move here. That candlestick there, yes, we grinded up thereafter, but really the data itself didn't provide too many clues to really look out for this afternoon. The crude number was pretty much bang in line. We had a build of just shy of 2 million. The Cushing was a draw of just over 500,000. Gasoline draw 1.1. Expectations were for a draw of 2. Distillates were a draw of 2 million. So this is probably the most unexciting inventory report that I've seen from the API in a while. One thing that I think, although the timing was a little bit off, but market sentiment might be more driven in crude at the moment by some of the reports that were circulating yesterday talking about Libya, where an unexpected disruption in Libyan crude output is helping all investors shrug off this kind of record US stockpile situation. So Libya's output is said to fall to 560,000 barrels a day after a pipeline carrying crude from the Shahara field, which is the country's biggest, stopped operating yesterday, basically. This was while clashes among rival armed groups in the nation have previously led to market disruptions. So don't forget, Libya was one of those countries which was exempt from the oil output cuts because of the kind of the civil situation there, clashes with armed groups and militia ongoing, which has caused several disruptions in recent months. And so that seems to just be occurring again. Although I'd say this is not really a new situation, maybe though when the Shahara field starts to get affected, which is in effect the bulk of the Libyan crude output coming out of that particular field, then people start to pay attention, and maybe that's just explaining some of the upside. Also, though, I'd say that if you look at crude, well, let's go back to 3 o'clock. Now, if you actually look at crude here in a bit more of a broader time frame, the actual biggest move came here. And what was it occurred there? 3 o'clock, US consumer confidence. If the US economy, if you're looking at it as a bellwether, forward-looking for the consumer to continue to spend, to kind of grease the wheels of the economy, to continue to grow, people continue to be happy to invest their money. Don't forget, this is the complete opposite situation of consumer confidence, which is materializing in the UK, which is on a downward slope. The US is only going higher at the moment. And so, the logic would be then, if the US economy continues to outperform and improve at a substantial pace, then crude oil demand would probably pick up. Global economic growth would likely be supported by the world's leading economy, and therefore that you can see has acted as really the bigger subject matter here, helping probably elevate some of this crude price more recently. So the overall kind of, if you look away from the pound and you kind of distance yourself and look objectively at the market, let's take the pound out of the equation. Actually, European equity markets are on the front foot. If you look at the DAX, we're back up at these really elevated levels. That's a daily continuation chart, so up to highest levels we've been all the way throughout the year, getting close to the 2015 highs, coming up only a few hundred points away. But looking at that break that we had of the mid-March high, we snapped through there this morning. So European equities are higher. Likewise, US futures edging up in sympathy. Gold is lower. Bunds are lower. This is all a risk-on environment. This isn't people fretting over Brexit. This is people looking at this really as a continuation of the theme of what we had yesterday. A really outstanding day for US economic data has kind of lifted the spirits of the market short term, which were dampened by what occurred on Friday on the cancellation of the repeal of Obamacare and this potential sentiment developing about how can Trump now deliver on more important fiscal policies going forward. This seems to have negated that, at least for the here and now, and markets are looking moderate risk on this morning on the back of that, irrespective of the fact that the pound is drawing a lot of attention for those kind of more formal reasons of this official beginning of Brexit. Just one other headline quickly before we review the calendar for the session. You have had German import prices this morning, and what you're looking at here is a slightly longer dated time frame. You're looking at 2012 all the way up to the present day, and you can see here from the lowest point at the beginning of 2016 to where we are at the moment, we're now back up to basically some of the highest import inflation figures we've had in a number of years. So, inflation definitely something which is of key focus in Europe, particularly Germany, which is seen at its most, is increasing at its most rapid pace in that particular country. Looking at the euro-dollar pair then, it is down, but cable is pretty much down double the amount of euro-dollar. So there certainly is a bit of sterling underperformance comparatively. Okay, quick look at the calendar. And the morning session is fairly quiet. From the UK at 9:30 coming up, we have consumer credit, mortgage lending and approvals. I'd say this is kind of, particularly in the context of what's going on in the UK market today, it's probably much lower down the pecking order. People more concerned probably by the tone and the speech that's going to come from the PMQs from Theresa May. And then looking further on, I definitely think you need to keep an eye out for any European official commentary, but I would imagine it would be more of a formal proceedings, kind of just acceptance of the letter. The technicality of it is now that Europe will then need to send a letter to all the EU 27 nations about the process of negotiations going forward. So nothing actually concrete happens today, so to speak. But EU comments and Theresa May will likely be closely watched. And then this afternoon it's pretty quiet for US data, pending home sales, and then those oil inventory numbers, but going off the APIs, maybe nothing particularly too exciting might come from there. But obviously crude on the front foot this morning might help if it starts to see some further upside, support any further gains that could possibly be seen in the equity markets today. Speaker-wise, you had Fisher kind of validating the Fed forecast of 3 hikes for 2017. Now we look for Evans again, who, if you remember, was, as depicted here, leaning slightly more dovish in his comments yesterday. So we'll see what he has to say when he speaks just ahead of the open on Wall Street. You've got Fed's Rosengren speaking at 4:30 European cash close, and Fed's Williams later this evening. So a couple things to definitely just keep half an eye on. Okay, that's pretty much your briefing. So again, I stress, just be a little patient here with the pound. I would say the predominant move has already really occurred yesterday. The real kind of trigger point of it, though, wasn't so much the Scottish parliamentary referendum or second referendum vote going through, wasn't so much the letter getting delivered overnight. Yes, I think that's kind of brought a dose of reality check to the markets for sterling, but it's kind of more the bigger driver has been from US led. And as we've discussed in numerous weeks, it's the US economy that is the broader global macro driver at this point. It's just that we have this kind of sidetracked issue going on of Brexit at the moment, which is obviously heightened on a day like today with the invoking of Article 50. Okay, guys, I'm going to leave it at that. So I'll see you in the chat room. Any questions, please do let me know. Otherwise, have a good day. And I'll catch you in the chat. Thank you.